Good morning. Today we will start weighted average profit method. That means calculation of goodwill through weighted average profit method. In the last classes we had discussed calculation of goodwill through average profit method or simple average profit method. Now we will understand how is weighted average profit calculated. Now according to this method, profit of any year is assigned a weight. That means if the profits of suppose 3 years are given, the 3 years would be given different weights. That means more value would be given to some year and lesser value would be given to some another year. Normally it happens that highest weight is given to the profit of most recent year. Now this is because the probability of profit is more or near to the recent year. So chances of profits will be more like 2016 than in 2014 if we compare the profits of 2015, 16 and 2015. So in future there is a probability that profits would be more near to 2016 or the amount would be near to 2016. That is why more profit is given to the later years or recent years. Now what is done after assigning the weights? After assigning the weights, each year's profits, suppose there are 3 years, each year profits would be multiplied by the weight given to that particular year. So suppose there is profit given 50, 100 and 150 like this. Suppose we imagine that there is profit like this. In 2014 there is a profit of 50, 2015 there is a profit of 100 and 2016 there is a profit of 150. Now what we will do, we will calculate the product. How is product calculated? We will multiply the profit with weight associated with that particular year. So for 2014 profit is 50, weight is 1, the product would be 50 into 1, that is 50. Now for 2015 it would be 100 into 2, that is 200. And for 2016 it would be 150 into 3, that is 450. So like this we will calculate the product and then we will add the products and the amount we get like this. First we will add the weights, 1 plus 2 plus 3, the total of weight is 6, then total of product is 50 plus 200, 250, 250 plus 450 is equal to 700. So like this we will get the product of the profit multiplied by weights, and then weighted average is equal to this product divided by total of weights, that means 700 divided by 6. So in questions we will do similarly, and then we will follow the formula for weighted average profit as we have discussed just now. That will be total of products divided by total of weights, and after we get the total of weight we will calculate goodwill. So according to question, the number of years of purchase as given in the question would be followed. So weighted average profit will be multiplied by number of years of purchase and we will get the value of goodwill. Now let us start questions. The question number 13 we would discuss first. So go through the question. Profits of a firm for the year ended 31 March 2000 or 31 March every years are given for the last 5 years. So these are the profits given for 5 years. Profit for 2015 is 20,000 like this, 24,000, 30,000, 25,000 and 18,000 for these respective 5 years. Weights are given 1, 2, 3 and 4. So 1, 2, 3, 4 and 5 respectively. So we will follow this method, and the highest weight would be provided to the recent year or the last year. Now we will calculate the product. 20,000 into 1 20,000, 24,000 into 2 is 48,000, 30,000 into 3 is 90,000, 25,000 into 4 is 1 lakh, 18,000 into 5 is 90,000. So adding the products we get 3 lakh 48,000. Now what is the value of weighted average profit? 3 lakh 48,000 divided by 15. 15 is the total of weights, that is 1 plus 2 plus 3 plus 4 plus 5. So the value of weighted average profit is 23,200. Now according to question, goodwill is equal to weighted average profit into how many years of purchase? 3 years of purchase. 3 years of purchase of weighted average profit. Then the goodwill will be equal to 23,200 into 3. The value is 69,600. Now come to question number 14. In question number 14 there are some adjustment too. You can see in the question the profits given are 2016-17 it is 2 lakh, then 2017-18 2 lakh 30,000, 2018-19 it is 2 lakh 50,000, but they have to be adjusted because the remuneration of partners have to be adjusted. So if you go through the question, goodwill is to be valued at 2 years purchase of last 3 years profit after allowing partners remuneration, and the profit that is available is before allowing. So net profit before partners remuneration were like this as given in the question. So we have to deduct the amount of remuneration provided to the partners. So like this, if you go through the working notes first, we will calculate the profit or adjusted profit which has to be taken into account for calculation of weighted average profit. So 2016-17 2 lakh rupees given or profit before remuneration. After remuneration, after deducting 90,000, that is the remuneration per year, the amount will be 1,10,000. Similarly for 2017-18 the profit before remuneration is 2,30,000. After deducting 90,000 the profit after remuneration is 1,40,000. And for 2018-19 the amount is 2,50,000 minus 90,000 or 1,60,000. So we will consider these values for calculation of weighted average. Now come to the solution. So these adjusted amounts are written as profits. Weights 1, 2 and 3 are given. You can see in the question. The product is 1,10,000 into 1, 1,10,000. Then 2017-18 1,40,000 into 2, 2,80,000. Then 1,60,000 into 3, 4,80,000. And if you add the products you will get rupees 8,70,000. Total of the weights 1 plus 2 plus 3 is equal to 6. Now weighted average profit is equal to 8,70,000 divided by 6, that is equal to 1,45,000. Now according to question, goodwill is equal to 2 years purchase of weighted average profit. So 1,45,000 into 2, which is equal to 2,90,000. So this is the answer or goodwill for question number 14. Now we will discuss question number 17. Now in question number 17 there are some adjustments. We have to calculate normal profits and then we will take into account the values for calculation of average profits. First we go through the question. Dinesh and Mahesh are partners sharing profits and losses in the ratio 3:2. They admit Ramesh into partnership for 1/4 share in profits. Ramesh brings his share of goodwill in cash. Goodwill for this purpose shall be calculated after at 2 years purchase of weighted average normal profit. So you can see in the question weighted average normal profit of the past 3 years. Weights being assigned are 1, 2 and 3. So weight will be 1, 2 and 3 simply. But we have to calculate the normal profits. Now in 2017, so first come to the calculation of normal profits as done in the working notes. For 2017, the profit given is 50,000, but there is profit on account of sale of asset. We have already discussed that sale of asset is abnormal profit, or profit on sale of asset is abnormal profit. So that amount will be deducted. So 50,000 minus 5,000, normal profit for 2017 is 45,000. Then for 2018, there is a loss. The amount of loss is 20,000. So minus 20,000 will be written, and this loss is due to loss by fire. So this is abnormal loss, and we add on abnormal losses. So we will add 35,000. Now we get a profit. So minus 20,000 plus 35,000 is plus 15,000. So this is the amount of profit for 2018. 2019, 70,000 is the profit given, but it includes insurance claim received 18,000. So this will be deducted. It is abnormal income. Then rupees 8,000 as investment, interest on investment and dividend received. These are also abnormal incomes that will be deducted. So we get 44,000 as normal profit. So we will take these amounts as normal profit amount for calculation of weighted average profit. So in 2017, 45,000 into 1, 45,000, 2018, 15,000 into 2, 30,000, 2019, 44,000 into 3, 1,32,000. Now total of the product comes to rupees 2,07,000. Now what is the average profit? Total of weights is 6, so average profit will be 2,07,000 divided by 6. The amount is 34,500. So according to question, the goodwill amount will be 2 years purchase of weighted average profit. So 34,500 into 2, the amount comes to 69,500. So this is the amount of goodwill for this year, 69,500. Now according to question, one more thing is given. Calculate the goodwill brought by Ramesh. So what amount Ramesh will bring? You can see in the question, Ramesh is admitted for 1/4 share in profits. So we have to calculate 1/4 of 69,500 to calculate the amount to be brought by Ramesh. So this is to be done by you. You have to add one thing. Amount to be brought by Ramesh is equal to 69,500 into 1/4, and then you will get the value 17,250. So you complete the question. Now next question we would discuss is question number 18. Very important question because there are some adjustments which should be understood carefully regarding closing stock and then opening stock, abnormal gain and loss also. Let us go through the question first. Manbir and Nimrat are partners and they admit Anahat into partnership. It was agreed to value goodwill at 3 years purchase of weighted average profit method, taking profits of last 5 years. Weights assigned to each year are 1, 2, 3, 4 and 5 respectively, and the profit for the year ended 31 March 2015 to 2019 are given 70,000, 1,40,000, 1 lakh, 1,60,000 and 1,65,000 respectively. First we will come to calculation of normal profits. So first you come to, or you see, the calculation of normal profits. On 31/3/2015, the value of profit given is 70,000 and there is abnormal loss of 20,000. Abnormal losses are added. We will add 20,000. We will get the normal profit rupees 90,000. On 31/3/2016, the profit given is 1,40,000, but there is an abnormal gain. The abnormal gain is rupees 30,000. abnormal gain is deducted, so we will deduct 30,000 and we will get the normal profit 1,10,000. Now on 31/3/2018 the profit given is 1,60,000, but there is a closing stock. So you go through point number 3. Closing stock as on 31 March 2018 was overvalued by rupees 10,000. So if the closing stock is overvalued, we have to correct it, and if we correct, then the value of closing stock will be deducted. So when you deduct the value of closing stock, what happens to the net profit? If you remember the trading account, and on the credit side closing stock is written. If you deduct the value of amount written on the credit side, suppose the value of sales or value of closing stock, if these amounts are deducted, the gross profit will reduce, and if gross profit is reduced, the net profit will also reduce. So we have to deduct this amount, because deduction of closing stock would lead to reduction in net profit. So this will reduce the net profit for 2018, and the net profit or normal profit will be 1,50,000. Now remember one more thing. In 2019 the profit given is 1,65,000. Although there is no adjustments directly written for this particular year, but we have to remember that closing stock of a particular year automatically becomes opening stock. So this you have to remember. Closing stock of previous year is the opening stock of next year. That means the opening stock will also be reduced. If the closing stock for 2018 is reduced, the opening stock for this financial year will also reduce. And what happens, since opening stock is written on the debit side, any amount on the debit side, if it is reduced, the effect on the profit is that profit increases. So in the trading account, if you reduce the amount of opening stock, then the profit will increase. Thus in 2019 we will add the amount and we will get the normal profit rupees 1,75,000. Now come to the calculations. So these are the normal profits as we have calculated, and after calculating we get the product like this: 90,000 for 2015, then 2016 it is 2,20,000, for 2017 it is 3 lakh, for 2018 it is 6 lakh, 1,50,000 into 4, and 2019 1,75,000 into 5 is 8,75,000. The product comes to, or total of the product comes to 20,85,000. Total of weights is 15. So weighted average profit is equal to 20,85,000 divided by 15, that is equal to 1,39,000. Calculation of goodwill: 3 years purchase of weighted average profit. So 1,39,000 into 3, which is equal to 4,17,000. So this is the answer for question number 18. Now at last we will discuss question number 20. So question number 19 you try yourself. In question number 20 again there are some adjustments that are to be done before calculation of weighted average profit. So straight away we come to the calculation of normal profits. In the question it is given profits as given are 1,01,000, 1,24,000, 1 lakh and 1,40,000 for these 4 years from 2015-16 to 2018-19. Now come to the adjustments. So point number 1, before or below the table, if you go, on 1st December 2017 a major repair was made in respect of plant incurring rupees 30,000, which was charged to revenue. Now if a purchase of plant is charged to revenue, that means it is debited to profit and loss account. It will lead to reduction in profits. So which is wrong, because assets should not be debited to profit and loss account, or purchase of assets should not be. So we will add rupees 30,000 in this particular year. So if it is done on 1st December 2017, the effect will be on 31 March 2018. So this is affecting the year 2017-18. 30,000 will be added, which was wrongly debited to profit and loss account. The said sum is agreed to capitalize for goodwill calculation subject to adjustment of depreciation. Now there is some depreciation on this amount because assets is purchased. So on asset of 30,000, depreciation has to be charged for how many months? The purchase is on 1st December. So from 1st December 2017 to 31 March 2018, there are 4 months. On 30,000, at the rate of 10%, the depreciation is 3,000 for 1 year. If it is 3,000 for 1 year, it will be 1,000 for 4 months. So 3,000 into 4 by 12, you will get 1,000. Since depreciation reduces the profit, we will deduct 1,000. So this is the deduction due to the purchase of asset and depreciation charge. Now remember, this is on reducing balance method. That means the assets value will be reduced, and then on the reduced value we will charge depreciation the next year. So 30,000 minus 1,000, the book value of this asset is 29,000. On 29,000 in the next year we will charge depreciation for whole year. So 29,000 into 10% is 2,900. So next year the amount of depreciation is 2,900. Now point number 2. Closing stock for year 2016-17 was overvalued by rupees 12,000. So again same thing as we discussed in the last question. In the year 2016-17, 12,000, if it is overvalued or closing stock is overvalued, now it has to be deducted, and the amount has opposite impact on the next year. So if the opening stock is overvalued next year, now correction will now increase the value of profits. So next year the same amount will be added. So you remember the same point. Then to cover management cost, annual charge of 24,000 should be made for purpose of goodwill valuation. This will be done later after calculation of adjusted profits or weighted average profit. Point number 4. On 1st April 2016, a machine having book value of 10,000 was sold for 11,000, but the proceeds means entire amount of 11,000 was wrongly credited to profit and loss account. Proceeds were wrongly credited to PL account. So proceeds cannot be credited to PL account. This is now deducted because it was wrongly done. So this will be now deducted. No effect has been given to rectify the same. Depreciation is charged on machine at 10% per annum on reducing balance method. So since it is, or the sale of this asset is credited to PL account, no depreciation was charged. So now it now has to be adjusted. So on 10,000 rupees, what is the amount of depreciation? So this will be done now. 1,000 rupees for this particular year, then 10,000 rupees minus 1,000 rupees is 9,000. So on 9,000, now depreciation will be 900 for next year. Like this we will do the adjustment. Then 9,000 minus 900 is 8,100. So on 8,100, depreciation for next year is rupees 810. So this is now adjusted in the next year. So this will be done, or 810 will be written next year. Now since the machine was sold out, so there is no need of charging depreciation which were wrongly charged. So we are adding back the amount of depreciation which were wrongly charged in these 3 years. So 1,900 and 810 on reducing balance method. Like this we get the normal profits for these 4 years. Now come to the calculation of weighted average profit. Now these normal profits are written, and then we multiply it with the weights. We get these amounts: 1 lakh 1000, 2 lakh 4000, 4 lakh 25,700, 5 lakh 51,640. The total of the product is 12 lakh 82,340. Total of weights is 10. Now we get the weighted average profit, which is 12,82,340 by 10, or 1,28,234. Now come to point number 3. Now according to point number 3, annual charge is 24,000. This annual charge will now be deducted from this amount. So we will deduct 1,28,234 minus 24,000. So whatever amount we will get, we will use that amount and we will multiply it by number of years of purchase, which is 3, and then we will get the value of goodwill. So value of goodwill for this is 3,12,702. So this is the solution for question number 20. So remaining 2 questions, 15 and 19, are to be done by you, and you have to give the feedback if you are not understanding any question. Thank you.